G'day all, and it's good to be here again at the Denver Gold Show, even though it's a virtual year, and I hope everybody's going well. I'll give you a overview of Wiluna mining, and then talk about some of our current assets and operations, talk about our plans for expansion and exploration and discovery. Just a bit of a corporate snapshot. We're owned by institutional shareholders, mainly overseas. We just recently added Sarah Kelly to our board to strengthen and diversify the board. Our market cap's today around $200 million, and we are essentially going reasonably well. We raised some money back in April. This is a graph that just shows the performance of the company over the past few months, which has gone pretty well, really. The regional setting, we're at the top end of the most prolific gold belt in Australia, the Wiluna Leonora Gold Belt. Wiluna mine itself is a very historical site. We own about 1,600 square kilometres of ground, all 100% owned, and we're surrounded by multiple, million ounce deposits, and we're sitting on a substantial installed infrastructure and resources in the ground as well. So we're a developing gold mining company. We've got a modest operation producing about 60,000 ounces of gold. We're exploring for discoveries and drilling our known inventory of resources, expanding those. And as I said, we've got a methodical 3-stage plan to expand production to over 250,000 ounces of production over the next 3 years. The financial year just gone was a turnaround year for the company. We achieved, through cash flow and some sale of assets and injection of capital through equity raisings, a clean up of the balance sheet. We retired $15 million of debt, normalised our creditors, and invested $61 million into the asset, including 48,000 metres of drilling, which is drilling supporting our current ambitions to expand production over the next few years. Our operations, as I said, are modest and in their current form are just transitional. The growth is about building a concentrator to process concentrates for the international market, which should be commissioned September next year, and then we'll push through straight after that and look at expand that to at least double the size, push through to over 200,000 ounces of production. Our discovery work, which we've made some announcements over the last 3 or 4 months, has been superb. The results are stunning. We'll show you some of those later. And we are very, very keen to show off more of that as we proceed. So we currently have, as I said, installed infrastructure. We've got reserves of 1.4 million ounces that'll grow. We've got resources of 6.4. We've got a new resource update coming out end of September, only on partial information up to the end of June. We've got a small 3 million operation which will be wound down, and the concentrator will take over from there. Our guidance is out there for people to see. We've got the infrastructure is quite substantial. Camp, we've got a tailings dam that can see us for the next 32 million tonnes of production, water rights, and other supporting infrastructure. The geological endowment of the Wiluna mining system itself, which is where most of the historical mining happened, is substantial. The structure you're looking at there is 4.5 kilometres along strike. It's got probably a 5 kilometre north-south dimension as well. There's 11 million ounces of endowment here already. Fortunately for us, there's 5 declines developed into this ore body. There's other level development, and there's still a remaining resource base that's over 4 million ounces. And that's what we're focusing on at the moment, and trying to turn that into a solid business plan to expand production. Current operations are from an open pit, which is 20 kilometres away from the plant. That'll be wound down towards the end of this year. It'll provide feed into the current plant to September next year. And we have a small underground mine that's also supplementing that as well. So going to the growth story, the 60,000 ounces of production, that's what we're doing. the mine development started for stage 1, and a lot of the drilling we're doing at the moment is to convert the ounces in the ground into a mine plan. That final mine plan for stage 1 will be published in December this year, or December or January, when the work's finished, and we'll continue to drill and do a feasibility study, which will be published sometime next year to support the stage 2 expansion, which is a nominal 1.5 million tonne per annum operation, again producing a concentrate for the concentrate market. Some of the recent results on this isometric here are stunning, and you can see the red bullseyes are where we're drilling at the moment to support our current planning, and then there'll be further extensional drilling at depth and along strike to fully drill this out. The fortunate thing for us is that, as I mentioned before, that the ounces per vertical metre are substantial, and a lot of it is on average above 600 metres. Only small amounts of development exists below that. And if we compare that to the larger gold systems around Australia that have been drilled down to up to 2 kilometres, we've got a long way to go in terms of defining further ounces. Our drilling budget at the moment is about $30 million annualised. We've just had 7 rigs on site. We've wound that down slightly. We've currently got 4 rigs operational. We'll look to ramp that up again in the next 2 months. The last set of results we put out, quite stunning, 6 metres at 112 grams, 12 metres at 12, all support the mine reserve drilling and resource conversion, and we're pretty pleased with both the grade and the widths that we're getting in all parts of the mine that we're drilling out now. The simple plan to expand production, the current crushing milling circuit will be utilised, and then that shaded blue area is the new bit, which is a concentrator, and we will be starting construction of that concentrator in October this year and commissioning in September next year, and basically bagging concentrates, gold concentrates, and selling those. Those concentrates have already been sold for the next 3 years to a company called Polymetal and Trafigura. We've dewatered large parts of the mine. The northern end of the mine is still being dewatered. We continue to drill. The underground development, you can see there, is happening, and we're refurbishing declines, level development, which will basically set up the production platforms going into next year, but also expand our access to the mine so we can drill out further resources. And as I mentioned, we have a offtake agreement with Polymetal, which is a London-listed company which produces 1.5 million ounces of gold, and Trafigura, which is one of the largest trading groups in the world. The initial plan to stay for stage 1 was done last year. This will get updated over the next few months, and this will look a lot different when we get to the end of this year. We're finding that the Bulletin area to the north, the Bulletin south, the Happy Jack, which is not even marked in there, are areas where we've filled in a lot of those gaps, and we'll end up having to probably not go to as many development areas in the first few years to meet our first stage production target of 750,000 tonnes per annum. Then beyond our stage 1 work, and this is really where Wiluna provides the maximum opportunity to expand the scale of the operation, but also define the geology to its full potential. The ore body is open in all directions, but not only that, if you go back up from the surface, like the Essex area there in the middle, where we're currently drilling some holes below it, we've drilled some holes from the surface. These are all open areas that look like they're going to provide substantial tonnage of additional material. And so the next 3 years will involve filling in the drilling to everything down to 600 metres, and then we'll, in a systematic fashion, expand our drilling to the next 600 and down to 1800 metres. As I said, the endowment of Wiluna above 600 metres is already quite substantial, over 10 million ounces. When we finish the drilling, the rest of the shoots that we found up in that upper area, that'll increase, and then we hope to replicate that, obviously, with the next levels. And really our discovery team is looking to try and scope out and define at least a doubling of the current resource base that we have over the next 2 or 3 years. The resource reserve definition drilling is really based on improving the quality of our plan and business going forward to get into a cash flow situation, and then we'll convert that into a feasibility study and a mine plan. We're aiming to sort of put into the stage 2 feasibility study, which will be published in the second half of next year, somewhere around 1 to 1.5 million ounces of reserves and a solid 2.5 million ounce planning envelope. All the approvals are in progress for stage 2, and we expect when we commission the concentrator for stage 1 that we'll be pushing through with the mine development, which is the longest lead item to expand production, and then start building the surface infrastructure, a new crushing milling circuit and doubling the concentrator, that we can then increase that production to over 200,000 ounces of gold a year. The engineering studies and the option studies to improve the cost base and the profitability are going to be done over the next few months. We're going to look at scaling up the operation so that our stoping methods are modern, our scale of underground mining matches the scale of the ore body, as opposed to some of the previous practices that involved narrow vein mining, high cost, lots of development for tonnage, for each ounce mined. We're looking to improve the ounces mined per development tonne in the future and improve obviously the cost base going forward. And as I said, that feasibility study should be completed at the point that we're commissioning the stage 1 concentrator, with a view that we can commence production or commence development and the final engineering on that in the following 6 months. We'll also look at to improve the base power cost over the long life of this operation. So we're looking at studies at the moment to try and put in up to 50% renewable energy into this operation over the next 5 years, which will allow us to have an insurance against long-term gas prices and give us a cleaner method of producing power on site. The water that we need for the operation is on site already. We just need to increase the infrastructure for that, and we will basically be expected to be expanding our production base. So stage 1 essentially will just morph into stage 2, particularly when it comes to mine development. The intention is to keep going and not stop once we get to that target production rate of 750,000 tonnes of underground production next year. This is a long section of the east-west lode, if you like, the main structure, and down to probably an average depth of 600 metres. If you consider those few shoots that are deeper to be quite minor, we're looking at about 10 million ounces, as I mentioned. And we will drill out that shaded area to a indicated status, which will then convert that all into a JORC reserve, and then over the next 12 months we will roll out drill platforms underground and systematically drill out the extensions and fill in the gaps, particularly in that Happy Jack Essex culvert area. That central area needs to be drilled right from the surface down to 600 metres, which is a very, very large opportunity to generate ounces in the top 600 metres as well. But our target is clearly to redefine the extent of Wiluna in the next 1,000 metres, which offers us substantial opportunity to potentially at least double the scale of this over the next few years. In terms of comparable assets, these diagrams are to scale. You've got Fosterville, Bellevue, Gwalia, Jundee, which is 60 k's away from us. We have a similar footprint, if not bigger. We have potentially wider, more continuous ore bodies, and we are shallow compared to all of these ore bodies. So we're already at a resource base of close to 5 million ounces at Wiluna. We've got a reserve of 1.3 million ounces. And as I said, the current drilling that we've done up to beyond June to now isn't going to be in our resource update in September. That'll come in December. And we expect the scale of Wiluna to match most of these large ore bodies that exist around Western Australia and Australia. It is definitely a world-class asset, and we expect the scale of it to become superior to some of the other well-known deposits as we finish our work over the next 3 years. We have another deposit in the regional package called Regent, which is just to the south of Wiluna. That's a Wiluna lookalike. It's only had very modest drilling. It's got some calcrete cover, and that's going to achieve some attention as well as potentially another Wiluna mining centre, a lookalike 8 kilometres to the south. The actual geophysical structure and geology here is bigger than Wiluna itself from what we know of it today. So it's only got a modest resource at the moment. Some of the recent drilling has been pretty good that we've announced, and we'll put that into the drilling plans over the next few years as well. The tenement package we have, while I've been talking about with the Wiluna Mining Centre, has 4 or 5 mine camp scale known geological systems, and then it's got the main Perseverance fault, which is the north-south main mineralising structure in the goldfields, and we own 100% of that. So there's a lot more opportunity to spend money on regional exploration as well. However, given our scale of Wiluna itself and the ability to convert that geology into cash flow and a decent mine plan in the next few years, we expect that we'll probably focus our efforts more on our Wiluna system first, and then we'll expand our work into the regional areas. And we have a number of large-scale opportunities that we'll be following up over the next few years. So what have we done over the past 12 months? As I've said, we've strengthened our balance sheet. We are maximising cash flow from our current operations, and that'll be ongoing through to September next year when that'll cease. We are transitioning to gold concentrate production in September next year. That program of mine development is underway, and the other infrastructure that we need, we expect to start development of that in October this year. And we have started the feasibility study, and we are going to match the drilling over the next 6 months that's required to develop the feasibility study for that stage 2 expansion, because we've got such a large resource base here. This stage 1 that we're talking about is just a modest step to start the process of total expansion, and who knows, long term, once the geology has been fully drilled out, we'll determine what scale Wiluna should be relative to its resource base that's defined at that time. And the discovery side of Wiluna is, as I said, very exciting. It's right under our head frame. We're just following our nose. The geology is there. It's just a question of drilling and definition, and that I think will excite people as much as the development plans to increase the scale of the operation from development. So we've got a substantial mineralised field, already 11 million ounce endowment and growing. We have low risk exploration to drive further ounces at a low cost, because we're dealing off developed infrastructure and known systems that we're expanding. We're looking at a methodical, staged production to get to over 200,000 ounces of production. We are essentially sitting on a resource base that is tier 1 already, which we need to convert into a tier mine operation, and we're in a tier 1 jurisdiction, which obviously puts us in a good stead. Significant sunk capital and very undervalued versus our peers. These graphs show on a dollar per reserve ounce, on a dollar per resource ounce, that we have a substantial way to go to match our peers in the same jurisdiction, and some of these are actually developers, whereas we're operators already, and producing cash flow. That's the board. I've talked about that, and so thank you very much for your time, and I appreciate the opportunity to talk about our story to you. Thank you.